Absolutely. But let's ask Rahul Shah, what does he make of Reliance and many other stocks in the markets? Rahul, hi, good morning. First, your read-through from Reliance's AGM and whether or not, there was enough for the stock to now push on higher because it's been stuck in a range for almost, 2 to 3 years now?
Hi, good morning. I think, as you rightly pointed out, one, obviously that Reliance is stuck in a range between last three years, and I think as good as for investors are zero returns. And on the back of the AGM on Friday, I think three, four major things which looks like, I think, were positive for Reliance. Number one, I think announcement by them then that, doubling their EBITDA in next 5 years. That's important thing. Second, talking about the Jio Platforms IPO, which was much awaited, and I think now people will have the clarity about it. I think which is going to be the most important business. I think 80% of the EBITDA will be contributed by Jio. I think that's more important for it, and I think we also as a house remain quite robust on the entire Reliance as a stock, including the Jio. We think that the growth will grow and the momentum in Jio platform will continue through wireless and non-wireless businesses both, and increase in the share as well as in the revenue from here. Second, I think plan for their AI business, energy business, and the core business. So I think all put together, I think with the valuations and with the futuristic thought processes, I think again the risk against with the rewards in the Reliance, and I think in a large cap play which has underperformed for quite some time remains robust. I think for investors who have not invested in Reliance, I think there's no brainer that they'll get around 20-25% in a year's time. So I think one should stay invested, and I think that the time has come that I think in Reliance, I think after a wait will be worth for the investors.
Okay, Rahul, I want to switch focus. Try and get your perspective on some of the smaller cap banks, because those are the ones which will likely continue to remain in focus. And RBL, where an Emirates has now received or completed preferential allotment of shares which RBL has allotted to it. There's Equitas raising money. There's also Turtlemint IPO which closes tomorrow. Give us a sense within this financials basket, especially small finance banks first. Turtlemint I'll come to, but small finance banks first, looking interesting. And if so, what's the tilt? What would you prefer at this point within that pack?
So I think if you look at it, I think underperformance by all banks in last 1 year, if you look at it, or maybe specifically in last 6 months, especially for the large banks, they've underperformed a big way, be it be PSU or be it be private banks. But the smaller banks with the theme like RBLs of the world post in preferential allotments, I think we've seen the stock rallying quite firmly in last 1 year. If you look at Federal Bank as well, in that Blackstone coming into it post that the stock has done quite well. So I think all the banks with the theme with the smaller balance sheets, I think they've done well. That's what the theme has been. And I think looks like, I think from here, with the credit growth, which is going to be a decade-high credit growth, which has come up, I think the larger banks to benefit most, that's my view is. But obviously, answering to your question, I think small and mid banks will continue to do well going forward. And the valuation still remains unstretched for most of the banks at the current levels.
Any specific names that come to mind?
So I think RBL is one of the bad. Then I think AU, which has done quite well, and I think the growth per se. So my sense, I think AU and RBL both should do well for the next 1 year or so.
RBL, AU on charts, Kunal?
I think RBL has done very well for itself. Recently, the stock climbed up about the 370, 74 mark. Even I think on Friday, it was one of the better performing private sector banking names. It's been a lot more consistent chart. There have been very mild phases of correction for RBL Bank, but then every time the stock goes into like a 10-point or a 12-point correction, it makes a comeback and then breaks past about the previous highs on the medium-term chart. So that's a positive for RBL Bank. AU Small Finance Bank, even the charts for AU Small Finance Bank, if I could probably add even Federal Bank to that list, these 3-4 names have actually done very well for themselves. And they've been like the stark differentiation with respect to the private sector banking stocks, where the large cap private sector banking names have struggled. these end of the mid-cap private sector banking stocks have outperformed and being a lot more consistent with the price returns.
Okay. Let me, in fact, before I go to Darshita, Rahul, what's the view here on IT at this point of time? Has IT bottomed, you reckon, or in around the bottom? Should one go and probably start buying into some of these names? Should we look at specific stocks versus basket approach? How are you looking at IT?
So I think post the essentials numbers, I think what we believe that I think the entire IT, large cap IT, specifically the numbers are going to remain as soft for this quarter as well. So that's what we've seen it reflected in the prices. And I think if you look at last 2 years, I think the IT stocks have been hammered and I think the valuations have just been good. So I think one is obviously with the large names with 3% growth and the valuations with 4% dividend yield and 11, 12 times earnings, the room for this IT stocks falling in the large place remains, I think, very, very minimal and looks like. But that doesn't mean that gives an opportunity for investor to participate and invest into it. So I feel that it's going to be other sector which is going to remain a pressure. Specific couple of mid-cap IT names, I think, should do well versus the large cap. But I think the sector remains a pressure. We have opportunities on other sector. I would rather be underrated on the entire IT pack as a whole.
Okay, let me go across to Darshita. She's here with the first set of stocks that you want to keep on your radar for this morning's day of trade.
Right, here are some stocks that are expected to buzz in trade on the back of fresh order wins. And starting off with Bharat Forge, the company has secured a 425 crore rupee order from the Ministry of Defence to supply the gas turbine generators for the Indian Navy, which further strengthen its defence business. Another defence name expected to remain in focus is Good Luck India. So its arm Good Luck Defence and Aerospace has bagged an order worth 255 crore rupee for the supply of 155mm long-range empty shells, which highlights the strong momentum in the sector. Now moving on to the infrastructure space, RVNL has received a letter of acceptance worth nearly 2,977 crore from NMDC for setting up a 10 million ton buffer stockpile and blending yard at Visakhapatnam, which provides a significant boost to its order book. Meanwhile, Texemco Rail and Engineering has won a 253 crore rupee order from JSW South Rail Logistics for the manufacturing and supply of the rail wagons. And finally, Kirloskar Oil Engines has secured an order from Hypernext for 192 megawatts of power generation capacity for AI-enabled data centers, tapping into the growing demand of digital infrastructure.
Thanks, Darshita, for that stocks and news. Rahul, we saw some kind of churn coming in. PSU banks are holding up. Private sector banks aren't taking off. And, we've now seen NBFCs now coming back into activity with respect to the kind of stock delivery that is happening for many of them, like Tata Capital and others. Do you think that, this churn is now going, there is some kind of interest back into NBFCs at this point?
I think entire financials looks like to be re-rated. I think that's what we've seen post the RBI's announcement about the FCNR deposits plus the tax which they have been cut for the FIS. So I think in the debt bucket. So I feel the entire sector to remain positive. I think banks which have underperformed, as I mentioned earlier, I think private banks, the large private banks offers a lot of value at this point of time. So I feel HDFC, ICICI from the private sector, SBI from the public sector, and the large banks to remain. As you rightly pointed, I think NBFCs also, I think particularly, I think should do well. So I think the vehicle finance companies we are positive on. Obviously, the companies like housing finance also we are positive on, and gold finance. So I think the entire sector. So I think the full-fledged NBFCs to remain focused on. That's what we've seen in companies like Bajaj Finance, which has done quite well in last couple of weeks. So we remain very positive in the entire sector, banks as well as the NBFCs play.
Railways, there's been quite a few orders which have come through. The big freight order is still pending. How should one play that theme? And if at all, just given the way, the fiscal deficit as well as all of the macros are playing out, Rahul, How should one look at government spend in FY27? Is that at all under concern or under strain?
So I think obviously government is looking at the fiscal deficit due to this last couple of months of this tension in their currency. So I think obviously the spend on the economy should be there. I think government on that they have been rightly taking steps as and when it's needed. If we see last year, we saw the GST2 coming into the play again this year. I think for the FIs, the FCNR 2 Part 2 came up. So I feel that this will continue. And as you mentioned, we don't have any specific coverage on any of the railway stocks, so we're not able to comment on it.
Okay, point taken.
Stocks and news. Just to add to Sun Pharma, that acquisition of 271 crores, which of Care, it's a nutraceutical company with a revenue of nearly 94 crores for FY26. So Sun Pharma has paid roughly around 3 times the revenues for that. But that's a sector which is growing at 10 to 12% CAGR, and from 14,000 crores currently, that entire segment is expected to grow to 24,000 crores in the next few years. So Sun is entering into a segment or trying to consolidate its market share in the segment, which is growing at a very fast pace, where FMCG companies are now acquiring nutraceutical companies, which includes HUL. There's a JV of Nestle and Dr. Reddy's, then Marico, Imami, all have acquired nutraceutical companies, and Sun is trying to enter that space as a pharma company there. But Rahul, how do you look at this acquisition from Sun's point of view? It's been aggressive on the inorganic front.
So I think if you look at Sun has been very active in terms of an acquisition with the large acquisition in the US, now followed by this acquisition. But this is a smaller deal in terms of the Sun's size of it. So I think so to look at into more details, doesn't look like anything major. This thing for a Sun's balance sheet or something. So I think Sun is focused, and if you look at in last 4 years, the way they have done there and managed in terms of the growth focus, we continue to remain preferred. We believe that the Sun will continue to do well with a 12% top line growth for the next year, and I think looks good to be at this juncture to buy in the portfolio.
Okay, good time to probably buy Sun. Rahul, plenty to speak about. I'm going to take a bit of a pause on this conversation, slip into a break, come back, speak a little bit about that Jio Platforms IPO, and then probably come back to you for a couple of questions, especially within the auto pack. Trent, there were some of the big buzzers of last week. We'll speak about that on the other side. Stay with us.
Welcome back. You're watching The Market, and we still have with us Kunal in our studios and Rahul Shah as well. Rahul, give us a sense of how do you look at some of the defense stocks? Do you see enough tailwind behind them?
So I think if we look at in last 2.5 years, I think we've seen that defense stocks have done quite well, and I think which continues to remain a focus. And I think a lot of people were not invested into this sector, and I think we have seen the under ownership starting some kind of allocation in there. So I think as a sector, one should definitely look at an allocation in it, and seeing the geopolitical stress across in last 2-3 years, I think one should the spend on the defense will continue to remain on focus and continue. And if you look at the larger names, they have got a double-digit growth, and which since last 2 years. So I think that's what the reflection in the prices as well. So we continue to remain positive on BL, HAL. This too remains our preferred bet in the entire portfolio.